Today in this video, we'll be understanding the concept of the national income and the related aggregates, and also we'll be seeing the conversion method. So let us start our video. So for that, we have these all 8 type of the related aggregates. We must know what do you mean by related aggregate and what these all related aggregates says. So today in this video, we'll be understanding all these parts of the related aggregates, like G is one part, like DP is the another part of the related aggregate, like MP is the another part of the first related aggregate. So here we need to understand these all 3 family members are there in each related aggregate. Here in the second related aggregate also we can see G is one part, DP is the another part, and FC is the another part. In the third related aggregate also we got N, we got DP, we got MP. So these all are the parts of the related aggregate. So before understanding each of the related aggregate or before seeing the definition, we must check what all parts of the related aggregate says. So the first part we have G or N. So let us understand what is the difference of gross and net. What do you mean by G and N? So that G is only the full form of G is gross and N stands for net. And gross is the broader concept because it includes depreciation. In one of the topic we have discussed the same, that is what the gross includes depreciation, because whenever the goods are purchased with the gross price it is purchased, when we are going to deduct the depreciation, then will lead to net concept. So we need to check here, that is what whenever we want to move from narrow to broad, if we want to reach from net to gross, we need to add the difference. And what is that difference? We will add depreciation to it. If I want to move from gross to net, so I need to deduct the difference, and that difference is only the depreciation. Here, we need to understand if we want to move from gross to net, if I want to reach from broader to narrow concept, I need to deduct the difference. If I want to move from net to gross, if I want to move from narrow to broad, I need to add the difference, and that difference is only the depreciation. It was the first part of the related aggregate. Now the another part of the related aggregate we got, that is what national product or the domestic product. Which one is broad we need to understand. National product includes NFIA, that's the reason this national product is the broader concept. And when I say that is what DP, this GP excludes NFIA. So again, if I want to move from narrow to broad, then I need to add the difference. That is what the difference is only the NFIA. Again, if I want to move from national product to domestic product, again I need to deduct the difference, and that difference is only the NFIA. So the NFIA stands for net factor income from abroad. The production which is generated outside the country, that we need to check. That is what NFIA stands for, net factor income. The income which is there outside the country, but it's the part of the country, that is only the national product, which is the broader term. And DP is the narrow concept, that also we need to check. So NP includes NFIA, DP excludes NFIA. Now, the third family member which we have, that is what the MP and FC. When we talk about the MP is the broader concept. MP stands for market price, which includes NIT. NIT stands for net indirect taxes. So net indirect taxes, how we'll be getting the formula we got, that is what it's the difference of indirect taxes and the subsidies. Indirect taxes like excise duty, GST, which is now the comprehensive indirect tax. So GST is one of the indirect tax, and when we are going to deduct subsidy out of it, then we'll be getting what? NIT. So NIT is the part of the market price. It is included in market price. That's the reason MP is the broader concept and FC is the narrow concept. Again, from narrow to broad, if I want to move, then I need to add the difference, and that difference is only what? NIT. So we will add from factor cost to market price if we want to reach, so we need to add an IT. Again, if it is vice versa, if I want to move from market price to factor cost, then I need to deduct the an IT, this difference. So that was the parts of the related aggregate. Then with all these parts only, we'll be seeing the another conversion method. So let us start with the conversion method as well, and along with that we'll be understanding the definitions of each related aggregate. So here we can check these all 8 related aggregates which we have. So these all 8 related aggregates includes these all parts only, either it is in the gross or it is in the net. It is either DP or it is NP. It is either FC or it is MP. In each of the related aggregate we have these all parts only. So for seeing the conversion method, we need to by heart these all things, that is what which one is broad, which one is narrow, and the difference of both the items will lead to what. So gross and net difference will lead to depreciation, and gross is broad, net is narrow. NP is broad and DP is narrow, and difference of both will lead to NFIA, and MP is broad and FC is narrow, and the difference of both will lead to NIT. So now today you have to understand first of all the definition of GDP at MP. Whenever you'll be seeing, so you'll be using the same definition for all the related aggregates. Like GDP at MP, it's what? It is the monetary value of all final goods and services which is produced within the domestic territory of a country, and that too in a year. Let me tell you, this GDP at MP will be considering it as the base, and every time we'll be understanding the conversion method for writing down the formula for, or you can say for writing down the definition as well for the other related aggregates. So we'll be using this GDP at MP only. With this GDP at MP, we'll try to frame the other definition as well. Okay, how to frame the definition? I have mentioned few points that you have to understand. Every time we'll be considering the GDP at MP as the base, and with that base only we will see that whether the concept is included in that concept or not. How? That I'll be telling you today. And every time I'll be coming to these points later. First, let me give you the example. Okay, the example which is I have mentioned, that is what? Suppose GDP at FC, the definition of GDP at FC, you have to note it down or you have to write down. So first of all, you just see the conversion method here. Every time you understand that GDP at MP is with you. I'm saying the GDP at MP, you consider it as GDP at MP as the base. It is with you. You understand it in this manner. And with this GDP at MP, we have to reach to GDP at FC. We have to reach to GDP at FC. So what will different terms are there? The three family, in both the related aggregates, the three families are there. You just see the first family is what? The first family is G. You can see, which is there in both. DP, which is there in both are common, but the last family is not common. From MP we have to reach to FC. Okay, whenever I'm saying, when you have the broader concept and when you have to reach to narrow, from broad to narrow, I'm saying GDP at MP is with you, consider it as the base. If it is with you, from MP to FC, how you will reach? So if I say MP is the broad and FC is narrow, so from MP is the broad, okay, and from broad to narrow if you have to move, so something you have to deduct. So what is that something? What was the difference between MP and FC? That only we have to deduct. So here the formula will be what? GDP at MP minus NIT will be the formula for the conversion method. What all things we are seeing here for converting it to GDP at FC. This GDP at MP you have with you, consider it as the base. What all uncommon things are there that you see? G and G are the common here in both the related aggregate. DP and DP are common in both the related aggregate, but MP and FC are not common, and we have to reach from MP to FC. If we have to reach from MP to FC, so how you will reach? As MP is the broad concept, from broad to narrow you have to move. Every time when broad to narrow, if you have to move, so something you have to deduct. And what is that something that you see? So here the something will be the difference. And what is the difference between MP and FC? That you all know already. That is what? The NIT. So this NIT will be deducted from GDP at MP. You will reach toward GDP at FC. That only I have mentioned in this slide. You can see now how to frame the definition. First, consider the GDP at MP as the base every time. Then use the include or exclude using the base. Use, include or excluding. It includes or it excludes the concept, that only you have to use. Means you have to deduct the difference. Use differences as from broad to narrow, deduct the difference, and from narrow to broad, you have to add the difference to GDP at MP only. Okay, before going ahead with the another example, I would like you to tell the definition first of GDP at FC. What will be the definition of GDP at FC? You can see I have used the same definition which was there for GDP at MP first. It is the monetary value of all final goods and services which is produced within the domestic territory of a country in a year. Till here, the things are same. The formula till here from of GDP at FC is same, which I have informed you about GDP at MP. The definition is same till here in a year. But after that, if I am deducting the thing, if I am deducting, I'll be writing excluding the net indirect tax in the same definition. That is the only thing. If I'm adding anything, then I'll be using the term including in it. I'll be using the term including in that case. But here the things I am excluding, that's why here and the formula, as you can see, the formula was we have to deduct the NIT. So in the same definition, what I have used the term excluding the NIT. But if I'm adding anything, then I'll be using the term including. Let's check the next related aggregate, which is NDP at FC. NDP at FC. So what all different terms are there that you need to check? G and N, both are different. DP, DP, both are common. So we need not to check DP if it is common. MP and FC, these two are the different concepts. Again, from MP to FC you have to reach. So again, we'll start with the first thing. That is what? We have to come from G to N, we have to reach. From gross to narrow, we have to move. From broad to narrow. Gross is the broad concept and net is the narrow concept. From broad to narrow, you have to move. Again, I'm telling you. G is the broader concept, N is the narrow concept. From broader to narrow, if you have to move, you have to deduct one thing. What is that difference? That only will be deducting. And the difference you all know between G and N, the difference says about depreciation. So from broad to narrow, if you have to move, you have to deduct already. So that is why the deduction is done. The depreciation is deducted from gross to narrow as we have to move. So gross is the broader concept, net is the narrow concept. From broad to narrow, that is why we have deducted depreciation from GDP at MP. The another thing which you can see, that is what? We have to move from MP to FC. Can you see? From MP to FC. Again, these two are the different terms. Again, these two belongs to same family, but both are not common. Both are not same. As MP is the broader and FC is the narrow. If broad to narrow, if you have to move, again we'll deduct the difference. And what is the difference between MP and FC? The difference is NIT. The next thing you can see, we have to move from DP to NP. DP is the narrow concept and NP is the broader concept. Just vice versa. Check it once. If you do remember the formula, the slide, this one. Okay, here you have seen that is what domestic product is the narrow concept and national product is the broader concept. If we have to reach two broader concept from domestic product to national product, you have to add this NFIA. That is only the difference between these two. Okay, domestic product is the narrow concept. We have to move from domestic to national. So you have to add the difference. What is the difference here? Difference stands with NFIA. So that is what we are going to add. So in the same formula, if in the same example, you can see NNP at FC, you have to move from GDP at MP to NNP at FC. So here you can see that is what? Here from DP to NP, you can see we have to move from DP to NP. So DP is the narrow concept and NP is the broader concept. That is why we have added NFIA here in this formula. If the things are clear, you can check. The MP to FC, we have to move now. Market price is the broader concept. FC is the narrow concept. From broad to narrow, if you have to move, then you have to deduct the difference. And what is the difference here? That is only the NIT. In this manner, directly you can frame the definition. So what is your today's task? You have to frame the definition of all these 8 related aggregates. The first 3 I have informed you, I guess. No, the GDP at MP I have informed you. GDP at FC I have informed you. NNP at MP I have informed you. These 3 definitions I have informed you today. So what is your today's task? You have to write down all the definitions in a single page. First, you have to write down the heading. Then if the conversion is there, so for the first one, no conversion is required. But for second, from second to last, you need to present the first the conversion way, and then you have to write down the definition.